Hello and good morning, everyone. Today is Tuesday, January 10th, and I'm Michael Boutros, currency strategist with SB Trade Desk here for this intraday webinar. Good to be with you guys here today. Just getting on board. Good morning, Sharif, Eileen, Pooja, Steve, Henry, Graham, Mark, Pete. Good to see everyone here in the morning. Good to see everyone here in the room this morning. So, a little tongue twisted this morning, but let's jump right in. Looking at the dollar, just to start things off, here's what the relative performance looks like so far in this session. Things on tap today. I want to review the dollar index, obviously, as always. We're going to cover Aussie dollar first. As disclaimer, still holding a short on that from last night. We'll go over that. Dollar CAD. Implications for crude, both those charts presented last night in the update. I just want to touch base on Aussie CAD, which is making a very impressive monthly opening range. Haven't touched it, not really interested right now, but we'll take a look at that. Dollar yen, Kiwi dollar for Pooja, I got that one for you. Gold, and Euro yen, still in that range, looking for that break. All right, so that's what I have on the menu. Sharif wants to look at stocks S&P 500. I don't really have active near-term setups on that, Sharif, but we'll definitely take a look. S&P 500. Gotcha. Okay, any other questions, trade setups you guys want to review? As always, feel free to throw it on the message board at any time. I'd be more than happy to take a look for you. So, to start off this session, here's what the U.S. dollar looks like. Relative performance still has the dollar stronger today with a little bit of bounce here against most of its major counterparts. Sterling making a slight rebound, or let's just say holding its own, basically flat on the session. Biggest loser was Kiwi, down 0.61%, Aussie down 0.15%. Now, Aussie actually rallied into the highs, and while it is only showing a net loss of 0.15%, the turnover from the highs is down somewhere around 40 pips right now. So we'll go over that one as well. Obviously, lackluster moves in overnight trade on most of the majors here. Just one thing I wanted to note, I did talk about this briefly in the summary for yesterday's piece. Year to date, here's what the dollar performance looks like, guys. Okay, since the start of the year, basically last week and yesterday. The dollar is weaker against most of its major counterparts. Is that a bout of profit taking? Are we coming off of a more significant technical resistance? That it remains to be seen. Our focus as we came into the start of the year was lower sub 103.21. That's still the broader bearish invalidation level. Okay, immediate resistance caught last night pretty decent. Remember, we added this slope here in the webinar yesterday. Wasn't too sure that I wanted to get too, or I didn't want to rely too heavily on it just yet. The median line actually did offer some decent resistance. The pullback still holding near-term support. Again, we're looking for inevitably a drop down to 101.11 and more importantly 100.73, that swing low from December, but also structural support and confluence of median lines there. So really no change on the DXY as far as that's concerned. As always, keep your eye on broader euro dollar price action as it is much more heavily weighted the euro. But that being said, here's what the intraday chart looks like for the dollar index. Whoops. Okay, so that slope that we added yesterday, here's the median line. You can see we came right into it. Really nice pivot. That offered some resistance. 102.52 is the exact high, and we've moved lower. Now, the monthly, weekly opens both come just ahead of that median line and further reinforces the immediate downside bias while below that region. Do you know what the price source for that DXY? What's TVC? I think, Sharif, it's Trading View something is where the source comes from, but it's pretty in line with DXY on most other feeds, so I wouldn't worry too much about that. He says, cool, thanks. Yeah, no problem. So broader picture, the immediate focus is lower sub the weekly open, the median line. That basically comes in just lower from where we capped out yesterday, near 102.26, 102.30. If you see a topside break there, you're likely to see a rally of a little bit more magnitude, but the broader focus still remains lower sub 103.21. Remember, we haven't been able to clear that level once on a closed basis, and at this point, as we noted yesterday, it is the monthly and yearly high day close. And that converges on not only some really clean slope but also the current upper median line parallel. So as far as the dollar index is concerned, the levels are exceptionally clean. I still think you might get another rebound off here, but broadly looking to sell strength in the dollar index. Key resistance 103.21, key support 100 spot 73. Any questions on the DXY, both near and long term? Okay, so with this in mind, just as a quick caveat, if you're holding Aussie shorts from last night, again, look for this strength to teeter out, which could curb Aussie weakness or at least a move to the downside here in the near term. So I am chipping away at that position, kind of slicing some lots off every time we jump another 10 pips. Quarter of the daily TR is only 17 pips on Aussie, so I'm not looking to get too aggressive on it, but we'll go over that in just a moment. Any questions? Final countdown, dollar index. Hey, Conwall, great to see you in the room, sir. Okay, next up from last night was Aussie. Here's what Aussie looks like. I love the trade. I love where it tapped out last night, and that's really the focus for me right now. So here's what Aussie looked like last night. And as I noted, I think it could make another high. That's exactly what it kind of did. It went right into another high, which capped out perfectly at this median line, extending off the highs that we made from August. It's been a messy structure, but largely we held the lows. We got some decent pivots off the 50 line. Here's that region to 38.2 into 73.96. Swing low gave you 73.70. So within that 20 pip range, you're basically, or 16 pip range, you're basically looking for an exhaustion high. That was the daily chart. Here's what the 240-minute chart looked like. Within the confines of just the near-term advance off the lows, you had the upper median line, or just a basic trendline resistance, okay, 3 tags, which converged on that region. If you take a parallel of that, really nice symmetry on both sides, pivots, instant support. And again, further highlighted the risk for a reaction off that 73.96, 73.70 level. Here's what the intraday chart looked like yesterday on the 60-minute. Again, you had a nice momentum trigger here, which was in play. Momentum was above 60, which is, again, why I was looking for that last stab high. Luckily, it worked out, and you actually caught one last stab high. Here's what it looked like. On that high, the conviction to try to fade it, guys, was the clear-cut momentum divergence. Both reference points below 70. It's exactly what you want to see. Price action with a higher high, the oscillator with a lower high. And then finally, that trigger break gave out, really giving you a downside bias. This is a two-hour chart. Here's the 60-minute looks like. Okay, even more apparent here on the divergence. So here we are. Initial support on the downside here, 73.30, I think is what I cited yesterday, 73.28. We haven't quite hit that yet. I have a limit down there for another chunk of the position. The exact low so far was 73.31, so missed it by 3 pips. We'll see what the U.S. Open looks like, but largely speaking, a really nice tag. Again, if you look at the daily chart, it's precise tag of that key level. So the risk remains for a move lower here, and that's why I think I wouldn't be too surprised if the dollar index shows us a little bit of a rebound or relief rally off of the losses that we've seen, and you're seeing that early in U.S. trade today with the dollar slightly stronger against most of its major counterparts. Okay. Any questions on Aussie? Bearish invalidation remains unchanged at 73.96. Again, look for that initial opening range high for Asia at 73.28 as your initial target. Again, really what we need to break is this median line, the weekly open, that takes you into 72.95 into 73 basically. Okay. Juan says, sorry I'm late. Please cover Euro Pound. Juan, no problem, man. Euro Pound. Let's throw it on the list. Euro Pound. Definitely saw. I'm not going to lie to you, Juan. I haven't looked at it yet today. I would be surprised if we didn't see a big move on the sizable move that we saw in the pound yesterday. So we'll definitely take a look. Hey, no problem. All right. Any final questions on Aussie? Continue to see how this one pans out, and we'll see if we can't slice off some more of those of that position as we get into that median line. Into the U.S. trade session, by the way, if you get another rally back near 73.70, that might be a decent opportunity to try to enter again. I'd want to see momentum start to hold 60 on the upside. to see that sort of shift in behavior, but certainly the risk remains for that dip. Do we have Eurodollar crude on the list? Yes, we do, Surab, and copper I don't. Let me put that down. Not really too impressed with copper prices right now. Euros or whatever, crude definitely. That was highlighted last night. We'll go over that in a moment. Okay, so that's Aussie dollar. Number 2. Let's jump into dollar CAD. Number 3. Here's what the loonie looks like. Again, not really much for me to do here. I just wanted to highlight that the weekly opening range. Theo, yes it is. I just wanted to highlight the weekly opening range, which is very clearly cut, setting up and taking shape above support. More importantly, here's what the dollar CAD daily looks like. And guys, I know this is a messy chart, and for dollar CAD, I was actually doing some pretty in-depth analysis on this yesterday as far as the slope is concerned. I just want to show you a couple different things. The significance of 31.90 into 132 can't be understated at this point. You're looking at basic trendline support off the lows from last year. You're looking at a 786 retracement from the advance off the lows you made back in December. Near term, I was messing around with this yesterday, and I didn't put it on the intraday 240-minute chart because it gets kind of hectic in price, but I just want to show you this pitchfork right here. Too early to tell if it's really a slope that we're going to be able to work with for a longer period of time. But the interesting thing is, if you play with it a little bit, you can see really nice symmetry up here, resistance, support. Again, if you just take it to the high, this is the high I'm actually using in the report, continues to highlight this support barrier just below 132. So to open up the week, even if dollar falls apart even more and it kind of dips into this region, I'd be concerned about chasing dollar CAD lower, okay? And with what we're seeing in crude prices, which certainly has the red flags all over the place, further weakness in crude could exacerbate weakness in CAD and really give us a nice little rebound here in dollar CAD. So at this point, the play for dollar weakness, in my humble opinion, is not really here in dollar CAD. The swing side of trades, if you guys are following Jamie, we're long already, looking for targets near 33.70. So I'm right in line with where he is. I do think we could see a rebound off these regions. You could probe into a new low, but as long as you stay above this region here, I think you need to be on the lookout for some exhaustion on the short side here for dollar CAD, i.e. long triggers. So that's sort of the mindset I'm moving forward with heading into the deeper into the week. Here's what the intraday chart looks like. This is the 60. Let's jump back to the 4-hour real quick. Basic trendline resistance off the highs. Okay, nothing fancy here. Pivot that we've been working at 132.65. That's just the swing low that you made here from November 8th. Some nice pivots in price. Both converge right around 132.65. So that region is the level. Let's call it the breakout zone. You'd look for a rally towards the median line. This, again, is the median line we added on the daily chart. Okay, that comes in right around 133. And then 133.40 into 133.50, a little bit bigger of a resistance zone for dollar CAD. What we've been looking at, and I know this chart kind of probably looks a little hectic to you at home. What we've been looking at, let me clean this up, has been this. You see these slope lines in red, guys? This is basic trendline support. Take a parallel, right? Really nice pivots, support. Take a parallel off resistance, break, support, break. That converges there at the next target if we do break out. Okay, so this is the deader or the more gradual slope. If we add that pitchfork, okay, it adds right ahead of this breakout, the 32 level, which is why that's cited as a target on a break higher. So moving forward from here, keep your eyes, or that 33 handle, I'm sorry, I said 32, 33 handle, which is the next resistance zone if we clear that 32.60 zone. But long story short, keep your eyes for some exhaustion lows, looking for long entries while above that key confluence zone. I'm going to call it 31.60 for now. A break below 31.40, finito. I mean, if that gives way, dollar CAD could see some serious downside. The next target wouldn't even be until the 200-day moving average, which comes in just below 31. So you got a clear-cut, longer-term critical support confluence that converges on near-term slope and longer-term slope. And while you're above 31.50, 31.60, I think you're at risk for a little bit of a near-term recovery. Inevitably, I think you still sell a bounce, okay, longer term, but certainly the near term, the risk is for a move lower, a spike lower into that key support with a rebound taking you more towards 33.80, 33.38, and, well, first the 33 handle, then 33.38. Questions on dollar CAD. I hope I didn't confuse anyone. I know the chart is getting kind of hectic here with all these lines, but I just do want to keep this in focus. We don't have enough play off this structure for me to really focus too heavily on this. So we've been working with these red slopes for weeks now, and they've been pretty fruitful. So for now, I'm going to leave them right here, but we'll clean it up as soon as we get a little bit more clarity. Here's what the 2 hour looks like, 1 hour. And then you can see, again, the weekly opening range taking shape just above that key support zone. Do get crude inventories on tap, so keep that in mind. I believe that's on tap tomorrow. No, that's on tap today. I'm sorry. 12 o'clock in New York. DOE report for crude inventory. So keep that in mind as far as CAD is concerned. Now that we've mentioned it, let's jump right into crude prices, which was the third setup from last night. Kind of an over broader view, okay? I went over this in the webinar, so I thought it'd be prudent to show you guys. This is the weekly chart of what's happening in crude. And yesterday while we were in the webinar, Conwal, I hope you were still holding on to that short position. Worked out pretty well, okay? Here's what crude looks like. First, let me take you back into that weekly chart. So on a broader term, guys, 54.70 into 55. We talked about it late last year. Was a critical zone. Conwell says, yes, sir, good profit, right on. I'm glad that worked out. 54.74 into 55 was such a huge region. The 618, extension from the advance off the lows. Boom, boom, boom. 786 retracement from the decline off the 2015 highs, and the upper median line parallel all converged right here. Okay, couldn't get into a more key targeted region to start the year. The high that we made in price was accompanied by divergence in momentum. Very subtle, but it's there. Lower high, price action with a clear cut higher high. And it has to be on a weekly close basis. These types of divergences can be very, very telling. So coming into the start of the week, into yesterday's webinar on Monday, we were saying, look, long story short, this thing is primed for some downside sub 55. And certainly there was a near-term structure that we also closed to the downside on, which further exacerbates the move. The first level of interest, okay, for me at least, is somewhere around 49.50. Okay, that's basically the close high that we made back here on the weekly close of October back in 2015 on the rally. And that converges on a near-term slope I'll show you in just a moment for crude. Here's what the daily looks like. Okay, again, highlighting that 55 region just ahead of, you have basic slope resistance. This is a parallel off these lows. Okay, caught that. Momentum also failing here. Even if momentum holds equal highs and price action pushes into a new high, still divergence. Remember, we're looking for the oscillator to not validate a new extreme in price. It's not vice versa. So price makes a new high. This fails to make a new high. It's better if it's a lower high, but even if it holds those similar highs, that's still divergent. So certainly from a momentum standpoint, it's there. From an opening range standpoint, it's there with the break and close that we made yesterday. Near term, look at support at 51.46 into 51. It always covers those levels, 64. This region right here. You're basically looking at the June high and the October high close. Okay, and that specifically is the one we made on the 19th. Both of those regions come right here. So interim support, 50.40 is going to be the reversal day close from back in June on that high that we spiked into resistance and pulled off The reversal day close comes right there. That was also an outside day reversal close, so adding conviction to where we closed there. Obviously on the immediate reversal, it was instant resistance. A little messy here last month or into the close of 2016, but certainly that's going to be a downside target. Key support, again, 49, just like I highlighted on that weekly chart. This is the bigger region. 38.2 off the low here from, what is that, August, and you have a 50% from just the advance off of the November lows. Both of those converge right there. Bearish invalidation, still right up there. Now on the near term, okay, here's what the 60-minute looks like. Again, this is a new slope I added yesterday. I don't want to put too much emphasis on it just yet, but certainly the initial sort of touches have been okay. I don't want to, again, get too super excited about it just yet. You can see some nice, some nice touches here. Support, support, break, break, support. A little messy on this overnight rebound. Still looking for that drop into the final target near term, which was 51.45, 51.65. And as I was noting in yesterday's piece, I think, I think you're at risk for a rebound off this region. So even if we do dip into this, if you're holding short exposure, I'd start to sort of wind it down. The breakdown target, guys, is 51.19. This is the level of which, if we clear, I think you see smooth sailing all the way down to that 49 target. This is 100% extension. If this is a simple correction, that should limit the downside. Again, I'm of the mindset that you get a bigger turn, but near term, if we get into this region, you might see a little bit more of a sterner rebound, which would allow us to get a better positioning on a short. So long story short, if you're holding short exposure, look at these targets down at 51.45 and specifically 51.19. If we get through those, 50.40 and 49.90 are the initial targets. Again, the 49 handle being a little bit bigger of a key zone for crude prices. Bearish invalidation on the near-term approach would be up at the monthly open at this confluence region here. Okay, it's basically just below 54. And 55, or 50, 54.21, 54.30, that same key level is going to be the broader bearish invalidation level. Any questions on crude? Sort of fits in with our expectations for dollar CAD, right? You could see a little bit more crude losses here, prompting dollar CAD for a little bit more of a rebound off of that key 32 level. And again, on that rebound, we look to initiate a new short on crude, and likewise may give us another opportunity on dollar CAD. Okay, DOE inventory numbers come out at noon here in New York. Kamal says, thank you for the detailed analysis. Very, very helpful. Cheers, Kamal. Anytime, man. That's what we're here for. Okay, that was number 4. We covered Aussie, dollar CAD, and crude. I just want to touch base. I don't even really want to give this much merit right now, but keep your eyes on Aussie CAD. This chart was presented on the intraday charts a few days ago. Coming off of that lower parallel, which is what we were focused on to start the year. Look, the resistance level I'm focused on is 97.63. Look for a break of this zone, and that should set things off, in my humble opinion, to start off the year and the month. I mean, if we see a topside break, you're obviously looking for a rally right into 98.20. That's the 200-day moving average and the exact 50 line, which has been so fruitful in this move. Support, support, resistance, that converges right on that 200-day moving average. So very clear-cut targets. The monthly opening range taking shape just above support, your ideal scenario. Again, look for a break of this range between 96.40 and 97.60. Okay, I'm of the mindset that we get a topside pop here first, and then we look to sell that later on. That coincides with some, near-term CAD weakness. Just a quick breeze through there on Aussie CAD. Dollar yen looks like this. And dollar yen earlier in the week Looks like this. So we started the week saying, look at this key region of support into 115.50. That's the level to beat. That had the median line confluence there of the ascending formation off the low from last year, which converged dead on with a 618 retracement longer term right at 115.52. You saw an overshoot of that last week before a nice little rebound to the upside. That's still the level to beat for a wider, more significant, meaningful downside correction here in dollar yen. It's still offering support. Still the same region. We came into it in overnight trade, saw a little bounce. There's some very clean near-term structure I'll show you in a moment. But as far as the short side for dollar yen, although I like it, you can't get excited about it until we get below 115.50 in my humble opinion. I still am looking for a break of that to really favor a more aggressive short side bias on dollar yen. Here's what it looked like on the 240-minute last night. This was back on Monday, or on the Sunday night open into Monday. The rebound, we were looking for resistance here with our bearish invalidation level at 118.17. I still have that same bearish invalidation level, so you can actually bring it down a little bit at this point, which we'll go over in a moment, but that was the bearish invalidation level to start the week. Here's the pullback, now coming right back into that same slope support line. Here's what it'll look like on the 120-minute. Here's what we look like now. Okay, so we maxed out right into that 50 line on the pullback, right into that trend line support, lower median line parallel on the daily chart yet again. You can see that this median line literally almost caught the lows here, guys. And if you take a parallel of this slope and extend it off the low that you made here on the 19th, it's a perfect touch. So I'm a little bit more comfortable working with this slope for now. I don't want to get too aggressive on it. But for me, at this point, we're going to go ahead and bring down the bearish invalidation level to 117.26. That would necessitate a break above the weekly and monthly opens, which come right around 117 to 116.98. As long as we stay below that, I'm going to favor selling rallies in dollar yen with a break below. Look, a close below 115.50 would do it, but really an intraday price, even once we clear the lows from last week, objectively, that's a break of the monthly opening range. You'd look for continuation lower down towards 114.15. This level here. As a disclaimer, haven't taken any positions on this personally myself, just because of where positioning on dollar indexes, and that really hasn't been able to break, again, support. It's very similar. This is the dollar index chart. It's very similar what price action is doing. So, let this rebound, see if we can't get towards the median line in both those structures. Maybe another opportunity to try to fade that. But no change on any of the levels for dollar yen. Questions on the abomination? Okay, Kiwi dollar is up next. That'll be number 6. Here's what Kiwi looks like. All right. So, earlier on Sunday, where's the last Kiwi update from here? It was last Thursday. Here's what Kiwi dollar looked like. So, the major play here was within the confines of this ascending channel formation or median line formation. We've now kind of capped out that high, continued to hold. There's the April high. You see that? Literally, that was our bearish invalidation level and key resistance. We popped just shy of that, and we turned over, and we're now looking for a break of this region to really validate the move lower. Pooja, you were telling me that you were looking up Kamal said, I'm sorry I had to interrupt. Kamal saying I'm breaking up with the abomination. Yeah, we had a little love affair for a while there, right? You got to always remember who you're dealing with. But yes, I don't blame you. I'm kind of on the sidelines for dollar yen right now as well. But Pooja, on the way down, this is still the level to beat in my mind, and this is what we were talking about um, last week. The 69.50 into 69.73 is a whole support cushion, which has been a nice pivot. Caught the lows here, break, caught the highs here. Again, it's now near-term support, and near-term it also converges. This is where we are right about now on the lower parallel. Okay, so while I do like the concept of further weakness in Kiwi and a break lower, this is the move we got to sort of clear to get this going. Okay, here's what it looks like on the daily or on the 2-hour. So see that April high? We just missed it, okay, before turning over. And here we are knocking on the door of support. This is the level to beat. Once we clear the opening range low, objectively, that is a short side bias targeting 69.30. Well, actually, I need to adjust this to the new high. Excuse me. Uh, 69.33 at this point. The monthly open comes in just lower also at 69.20. So watch that 13 pip range there. And then it's on to the downside targets. You know, I think Jamie is looking for targets near 67, if I'm not mistaken. So it's a big region, guys. Nice pivot. Look for that move, sub 69.55, specifically 69.33/20 would really solidify, more of a key reversal type of move. Also keep in mind that that would actually be a concerted double top. Okay, once we break this low, that would give us a measured move. Okay, of 68.50. So just on a near-term approach, just on the super near-term, right? If we break this low, double top formation here, it gives us a measured move down into 68.50. Juan, did you ask that before I said that or after? We're reading each other's minds here. He's saying, so is that a double top? Could be. Remember, the biggest mistake people make with double tops is that as soon as the market comes into resistance again and pulls off, they call it a double top. The actual technical double top doesn't really give you any merit, Juan, until we break this low. That's when you actually get verification or validation to use this measured objective range to get your target. So yes, if that breaks, I would interpret that as a double top, to answer your question. Till that does, Juan, we are at support 69.55. Pooja says, thanks for the levels. We'll put off some at 69.55 and hold for a break of 69.20. I would love to see it. I'm with you there, Pooja. And I think it's kind of primed for it. And on a day like today where you think, okay, dollars at support could get a little bit of a bounce, that's sort of where you want to see the onset of these turns in price. Because despite the fact that the dollar has been kind of weak across most of its major counterparts, Kiwi still hadn't been able to make all that much progress, right? Again, a tell in near-term price. Okay, moving right along. That was number 6, Kiwi dollar. Let's jump into some of the commodities here. Gold, do want to cover that for sure. Here's 7. Look, gold has been, excuse me, another one of those trades that has been so textbook. For those of you trading stateside, if you're not trading CFDs, it might be worth it for you to set up a futures trading account or something because these levels have been very, very clean. So look, we talked about 1185 as being a near-term level of resistance that could offer a little bit more of a ceiling right now near-term. Do I want to take a short off that? No. Do I want to look for that pullback to get long again? Yes. I think this thing still stretches into, 1203, 1210 as an initial target. I'll show you near-term price action actually shows you a little bit more of a higher target near 1218. But the point being, I don't think this is done. Near-term, heading into the U.S. Open today, look at a couple of things. This is the weekly chart. You're looking at a momentum trigger dating back to the highs that we made for last year. Okay, that's forthcoming. And you're looking at this slope. This is the basic broader slope we're following off of the 2011 highs. Take the same parallel off the highs from last year. This is a weekly chart. Take the same parallel off of this resistance resistance, instant support. We're checking that right now as resistance for the last couple of weeks, last week and this week. If we break higher, that key region at 1203, 1210, look at this. Same slope off the low from October. Same region, 1203, 1210. Levels are very clear. 1220 into 1223, 1230 was a major support. Okay, really nice reaction to start the year as we were looking for. Still think there's more upside. Immediate threat is for a pullback from here, but you'd look to buy that any way you can up into 1203, 1210. This is a weekly chart. Okay, so sort of a broader picture here. If you need to take a snapshot, by the way, guys, feel free to do so. This is on the radar charts, although it hasn't been updated in a while. So feel free to do that. Daily chart looks like this. Okay, 1182 into 1185. Again, that same key region. There's that same slope we just talked about in the daily chart. Resistance, resistance, support, support, resistance. Confluence of the basic 236. Nothing fancy. It's the basic retracement. That's capped the advance for the last 4 days. Momentum is knocking at the door at 60. Knocking at the door. Okay? Long story short, topside break targets really clear. 1200, 1203. And there's that 1218 level I was talking to you about that didn't show up so clearly on the weekly charts, but on the daily definitely warrants a threat in my mind. Not only is it 38.2 basic retracement, but former lower median line parallel, which we broke and checked as resistance, that's also converging on the current slope off the highs. Big nice confluence here. That brings in 1218. Okay. On the immediate side, for a pullback, I want to stay constructive while above the monthly and yearly open. That's basically 1150 at this point. Like I said, with the top side targets pretty well defined here on gold. Any questions on the gold trade? Not really too fond of trading intraday, but here's what it looks like. There is a near-term pattern that has continued to hold off the lows. This is a basic median line or pitchfork formation right off the lows. You can see that lower parallel caught that low with precision. The upper parallel caught that high on the rally spike we made last week. And here's again, kind of failing right at those highs, struggling, little sideways action. You're seeing divergence. Price action making a higher high, oscillator making a lower high. And the threat certainly for a pullback is there in my mind. Okay, this is a 120-minute chart. There's a trigger there you might want to keep your eye on heading into this week. Just to put it out there, guys, I wouldn't want to get cute and try to short this per se. I know that we've talking about this being a big region, but the one thing with these commodity moves is that what we've seen is that when the market runs, it runs. You're always looking for the pullback so you can get a better entry to get long, but on these moves, you really haven't gotten that opportunity. So I wouldn't look to try to get cute and short this. If we don't get a pullback, there's always going to be further opportunities. If you're holding long exposure, this is a good time to take a little bit off, but you want to leave a little on the table for that breakthrough. If we do get 1182, you got another $20 move to the upside, of which I think could be a nice little pop if you're holding on the long side there. Re-entries for possible areas of interest. So, Mike, where would I look to get back in on the long side? First initial level would be sort of where the open is. What I just cited as the weekly open right here converges on the 618, and this would be 1171. So this is the first area of interest for support. I'd start to look for possible re-entry. Beyond that, it's still down here. Okay, and again, bearish invalidation at the monthly open, or bullish invalidation, excuse me. If we break below 1150, you'll likely see a spill right back into 1120. Okay, I want to see this hold this region here as support, looking for that move into 1203, 1200. That's number 7 on gold. Questions? Going once, going twice. Sir, copper and nat gas. I am also I am long, so level for trading. You're long both, Conwall? Let's take a segue into copper. Someone else asked about copper too. I think it was Juan, if I'm not mistaken, or Sarab. There you are. Here's what copper looks like. This will be number 8. I don't have an active chart on copper. Let's do a quick review here. Okay. Okay, I'm going to go ahead and ditch this pitchfork formation. This is a basic trendline resistance which just gave out. The break of upslope resistance is typically a very bullish move. You've heard me say time and time again, typically when you do see those upslope resistance breaks, it's really the onset of the most stern part, typically wave 3, something that's a little bit more robust as far as momentum, as far as the breakthrough. Certainly you're seeing that reflected also in the near-term momentum signature with the first break above 60 that we've seen essentially since early December. And in that instance, obviously, you saw a little bit more of a dramatic move from 260 all the way up to 270. So look, on this trade here, that retracement is active. Just bear with me. I want to see what this looks like. Okay, I would highlight you to this cushion region here. 618, 100. It's not quite a confluence, but it's typically a really nice zone to look for on an upside break like this. And also bear with me one moment, guys. I just want to see if there is any merit to this slope. That might be even better. All right. Ooh, which even reflects, you see that break, guys? That's even, this is where analysis pays off. That's awesome. So this further gives us validation of this being, in fact, some sort of near-term breakout. You have basic channel resistance. You saw a blip over there last week with the quick recovery. Again, nice basic slope off the lows, topside break giving you a real stern advance. That's also a break of the median line, which before that move saw one tag right here, one tag, 2 tags, 3 tags, really nice slope. Okay, so I'm going to go ahead and ditch this at this point. We'll leave that basic trendline support there. And at this point, you'd look to stay constructive while above perfect right here. Is that your November opening range low? I'm sorry, your November, late November low. This is, I guess, would be near your December opening range. Bearish invalidation, or bullish, excuse me, bullish invalidation, 255. Topside resistance level they really want to focus on is 263 into 264, this region. Here's what the 60-minute looks like. All right, Conwell, feel free to take a snapshot of that. Is that copper against the dollar? Yes. Questions on copper. Look for resistance here. If this breaks through, by the way, I don't want to stress this just because you have that slope. So actually, if you take a slope and extend it a parallel off that, you know, you can even get as high as 263 today in intraday price. Wouldn't really worry about it. Really, this is the major key resistance to watch for. In fact, does that extend off that? No. With copper up and Aussie up. Well, I'm not looking for too much Aussie up, Eileen. Aussie's seeing a little bit rebound now, but remember, I'm actually holding a short, so I hope that this doesn't materialize into much. Here's what that position looks like, by the way. The short was basically off here. Really nice divergence into resistance, and that was the key level that we were talking about last night. So I've shaved off a couple of different positions on these moves here as momentum was sort of bottoming out earlier this morning. So on this rebound, I'm really, my stops are at break even or ahead of break even at this point, but I'm kind of looking for Aussie strength to be tamed. I thought maybe Jamie mentioned ST with copper and Aussie at some point. Intraday, it's not always going to plan out like that. But wider range, yeah. I mean, wider range in general, if you just look at gold and commodity-based, they've both been rallying off the lows since the start of the year, right? But at these turns, a lot of times one will diverge, right? One will start to react before the other. One will be a leader. You'll start to look for that divergence to materialize into some sort of turn in near-term price. So we'll see if we can't get that here. Theo says, I'm sure too. Right on, Leo. I don't want to say that, Eileen, saying so you don't really give correlations much credence. I use them as general guidance. I don't use them to guide my trade by trade sort of behavior, right, Eileen? So if I like a dollar CAD, or let me use the example that we're talking about right now. Aussie dollars at resistance, I'm looking for the pullback. Copper, if I had gotten a trigger on the break here to the upside, I would have taken it. I won't limit myself to not take this position just because I'm short Aussie, right? Like I said, we always want to take every trade on its own merits. So for me, no, I don't let that limit me. If I'm taking a more longer-term approach, Eileen, and I'm looking to take a position, a more broader swing trade or something a little bit longer term, certainly I wouldn't want to take conflicting positions, right? I don't want to hold a long-term long copper and short Aussie because, yeah, then that correlation for me kind of will be something I'll have to struggle with. But throughout the course of the next session, 2, 3, yeah, I got no problem doing that. I'm not going to limit myself. Make sense? Okay, that makes better sense, says Alan. Cool. Yeah, we just with correlation, you just want to always keep in mind the time frame that you're looking at. I don't want to stress them too much if I'm looking for intraday price. So that's copper making its way through that resistance level, or trying to make its way probing through that upper median line parallel at this point. That's number 9 or number 8. Number 9 is going to be. I want to take a look at the S&P. Who was that for earlier? Sharif. Yep, gotcha, buddy. Let me take a look at it. I haven't really set up anything here on the near term. Yes, Conwall, we'll get nat gas too. Okay, we got 10 minutes, so let me see if I can't get through this for you. SPX. Look, I'm only working with some basic median line analysis here for the SPX, and I don't really want to stress it too much, but some things I'm looking at, okay? Obviously, if you guys saw the piece that Jamie wrote towards the end of last year, the risk is there, for a pullback. I don't want to be the fool calling a high on the rally that's lasted for 7 years right now, but there are certain things near term to take into account. You've been getting some divergence in momentum right off the bat. Remember, it's all about the closes. Bring this into a closed basis, you'll see a slightly higher high, and the oscillator making, obviously, a lower high. So momentum doesn't look like it's in the favor of the bulls right now. That being said, it's an uptrend. You know what I mean? Sharif, I don't know if you're trying to short this or what position you're trying to take. I do think you're at risk for a little bit more of a pullback, but I can't get conviction on trying to get any type of short on this unless you break basically the yearly open. Okay, it's 2239, 2240. That converges on these slopes. Okay, this is just some basic slopes that have offered some nice pivots in price. This is sort of the region you need to get to look for a conviction move back towards the lower parallel, back towards that 100-day moving average. You're basically looking at 2183. And again, I think that would be an opportunity to get long once again in stocks. Now, that's a big drop, especially on the back of, the election rally, which has been nonstop. So let's just put it this way, Sharif. I'm not interested in taking any new long exposure from here. If you get a pullback towards the monthly, yearly open, towards those lower parallels, it might be an opportunity to look for initial support, an initial bounce, rebound off that level. I can't get excited about buying at fresh, record highs here. So he says, not shorting. I've been long for a bit. All right, awesome. He says, cool, thanks again. Anytime, Sharif. If you've been long for a bit, I'm going to give you credit on that. That's awesome. I don't want to tell you to start booking profits too early, but this is an area of which if we're going to see some exhaustion, I'd start to look at signs of that. And the first type of signs I'd look for is these momentum divergences, momentum exhaustion points. So keep that in mind, Sharif. If you got a really strong entry on that position, I don't want to shake you out, but near term, let's call it this parallel or this basic trendline resistance, not even a parallel. 2016 trendline resistance. Sort of an exhaustion barrier that's just below 2,300 on the S&P. And obviously it's way, way too early to do this, but just as a drill, okay, if that high does materialize and does hold, possible structure to the decline might look something like this. I was looking at this yesterday, or this morning rather. Again, it looks like the initial sort of touches look good. Again, this is a big assumption. This is more of a concrete high, but look where the weekly open comes in. It's uncanny with these sometimes. And I hate to throw these out too early because I don't want you guys to kind of jump in full force, but this is what I would be looking at if I was trading the S&P intraday. Keeping a short side bias near term on the immediate approach below 2276. Make sense, Sharif? Or if on the long side, again, this is the breakout that you would need to get conviction to hold on to that long position. But either way, resistance at the open. He says, yes, sir, right on. All right, SPX. I do want to get through these. Got a couple more minutes to go. Pete, Sterling, I'll see if I can't get into it. I hate it right now. I didn't want to see that break. Now that it's broken, I really don't know what to do. It's coming into support, I think, near term, but don't really have anything on the Sterling. I will come back to it, though, I promise. Let me get through Euro Pound first, or let me finish up the commodities. Nat gas looks like this, Conwall. Ooh, momentum with a bounce right off 40 as this thing bounces right off some former major key swing highs just ahead of slope. I would see this thing even as high as, 336 would be sort of too perfect. I feel like that would be too perfect of a play, but that's sort of where I'd be looking. Strong divergence into those lows. This is a 4-hour chart, but strong divergence into those lows. Right there. Basic 38.2 converges on the median line right around 337. 50% retracement. That's correct. Yeah, and just to validate the expectation here for that upside, it's only a 2-point touch, but divergence into a trigger break off of a fib. If we break through the weekly open, which we're testing right now as resistance, look for a rally towards 329. 336 is where I'd start to look for possible reentry again. Inevitably, this is sort of your sweet spot for more critical support. my humble opinion. If you look back just in price off that level, resistance, 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 it's also the key 618 retracement of the advance. Broader terms, bear with me one moment. This might look super messy, but I do want to see what it looks like. Oh, broader term, a median line off the highs from October of last year gives you the median line confluence right there again on that same spot, right below the 3 handle. 294 would be the 618 retracement. That converges on both median lines heading into 17th, basically the end of this week, early next week. All right, Conwell, does that help there on nat gas? Those are the key levels I'd be looking at. Take a quick snapshot of this if you need for future reference. That is nat gas. It's number 11. Euro pound. Here's what euro pound looks like. A quick overview. I haven't looked at it yet. Let's see what it looks like. Oh, wow. Look at that reversal off of basic trendline resistance extending off the highs that we made back in October, specifically on the 11th. Near-term support, just eyeing it out. I'd be looking there. Juan, are you referring to euro pound here? Okay, he says currently head and shoulder on the daily, currently trading at the right shoulder. It's too early to tell. Way too early to tell, in my humble opinion. I see where you're coming up with the thought process behind that, but I wouldn't jump to conclusions to that magnitude just yet. Just the 240 minute looks like. So whether it's the right shoulder or not, you're at resistance, right, Juan? I'm with you on that. The way I play these head and shoulders is this. Resistance is resistance. We're at resistance right now, so I would be looking lower against this level. You know, a break below the neckline, you know, I don't want to make this chart any messier than it needs to be, but just to put things in perspective for you, whether you use this as the neckline or whether you use this as the neckline, being a little bit more liberal with it, using this as the neckline still necessitates a break below this region before you even get that measured move. So yeah, I'm looking lower just because we're at resistance. I wouldn't even start talking head and shoulders till we clear that neckline. That's where you kind of confirm that kind of move. But you are at near-term resistance any way you slice it. Basic trendline resistance, obviously you see those tags there. Has been a huge pivot in price over the last couple of months and all throughout the last year. So yeah, I actually like it off lower from here. Let me see what the intraday chart looks like. Don't have the trigger quite yet. So you could see this thing come into the median line and then shoot back up. Major key resistance, 88.22, 88.20. A break below 86.64, in my humble opinion, would shift the focus back towards median line support. That could take you as low as 85.50. But those levels I'd be looking at, I mean, you don't get much more textbook than that, right, Juan? That's a perfect touch of resistance. You don't get that too often. A lot of times I like to call this the grandpa trade just because it is much, much slower, guys. The ATR on this is not too big. Keep in mind it is pound pips, though, so you know, the pip value is always going to be an issue both on the gains and the losses here, so just keep that in mind. It's a slow burner, but once it makes its move, it tends to be a decent one. So look for support near 86.64, key support 85.50, key resistance 88.20, 22. Okay, much thanks, or much appreciated, says Juan. You're more than welcome, my man. That is Euro Pound, number 12. What did I miss? Did I get everything? Aussie Kiwi, who was that? And Pete, Sterling, right? Aussie Kiwi, Graham. Here's what Aussie Kiwi looks like real quick, Graham. Almost there. Almost there. We cited an upside bias in Aussie Kiwi late last week, looking for a stretch into 105.47. We capped out last night just below. The high was 105.45, so you'll grant me a 3-pip allowance here. I do still think you can make a stretch into it heading into the U.S. trade session just on some of the strength we're seeing in the Aussie here. Just taking back all my a good portion of my gains on this rally. But if we do see the stretch higher, watch for resistance here. I don't want to necessarily try to press the short just yet. If Kiwi breaks support, guys, versus the dollar below that below that 69.55 level, I think Aussie Kiwi can really rip. Now, that's not my favorite scenario. I do favor a hold near term here. But just keep that in mind. I mean, this is sort of a big, big region for me. As far as the easy, so long bias that we've been working with the last 2 weeks at risk into 105.47. I'll be looking for possible exhaustion into that region. All right, Graham, that's Aussie Key. Let me know if you have any questions on that. It's number 13. And there's one person I'm missing, Pete Sterling. I really hate it, but I'll show it to you anyway. Here's what it looks like on the daily. I think that's the only thing worth looking at. The swing lows, aside from obviously the post-Brexit low that we made back in October, which is a little bit more dramatic, but the series of lows that we made subsequent to that month is still the 120.90 level, 120.89. We didn't quite make it there. You know, I don't know what to do with this. You know, you're in the downtrend. We broke the opening range lows. We made a pretty dramatic reversal day off resistance. I don't want to fight it. Pete, my inclination, as I told you guys, is for a sterling rally. And that's sort of what I still want to do, but I don't want to get stubborn with this and try to fight a falling, or try to catch a falling knife, or whatever all those sayings that people will use, right? I don't want to start trying to do that. So I need strength through 122.35 at the least to get this thing going. Not really that level stressing so much the 50 line. Now, if we get through this, you know, okay, let's fill that gap. Let's see if we can't get a rally towards the upper parallels. Until then, man, I'm not going to try to fight this. It's, you know, if you sit here trying to catch the lows, you're going to get burned. At the same time, I'm not going to short at fresh extremes on the lows. So I really got no play here on pound, guys. Trust me, once I do, you're going to be the first to hear about it, obviously, but I just think there's better juice for your dollar elsewhere. If you look at pound yen, if you take a gun to my head, pound yen is coming into an interesting area of which I'd start to look for some initial support. Now, obviously, it did make that pivot break below the 200-day moving average and closed below it yesterday, which does put a downside bias on it while below. But we're coming on the median line, and we're coming on some initial pivot zones I'd be looking for, i.e. 139 into 139.40. It's just below the median line. Basic 38.2 retracement, and a series of highs, both the ones that we made here in September and also the late June swing highs post-Brexit there. So, you know, if you really feel compelled to trade something pound, a little bit riskier in my opinion, but pound yen does look something interesting. If you take 100% extension, 2 equal legs down, so a basic correction also converges on that 139 level. So I think a pretty nice region of support, to start looking for possible scenario where we'd see a turn in the pound. Other than that, he says, yeah, I want to get long also. Thanks. Gotcha. Yeah, Pete, you and me both, man. I just, you know, we need to wait for the conviction to be there. I can't start chasing this thing, trying to look for it. You know, God knows I've learned my lesson over the years to try not to do those kinds of behaviors. But that said, we'll wrap it up here. Guys, don't forget, crude inventories come out in a couple of hours here in New York at 12 o'clock, so keep your eyes on that. We'll be back tomorrow morning for another intraday strategy webinar. Same time, same channel, guys. Best of luck trading. Eileen says, all good here. Have a great rest of your day. See you again. Not to do that behavior. Yes, yeah. Sometimes you got to remind yourself, whether it's Post-it notes on the walls or something. If you find yourself falling into those pits, just do yourself a favor. All right, guys, we'll see you tomorrow morning. Best of luck trading. Cheers.